Imagine waking up tomorrow to find Bitcoin regulations completely transformed by Trump's government. How will this influence your investments? This isn't just speculation, it's a real possibility. With Trump's administration known for unconventional approaches, the cryptocurrency landscape could shift dramatically. What if regulations tighten, pushing Bitcoin underground? Or what if they loosen, sparking a boom? Dive into this analysis to uncover the potential impacts and stay ahead of the curve. Gain insights into how Trump's policies could reshape Bitcoin's future and learn strategies to navigate this dynamic environment. Your investment strategy could depend on it. Bitcoin, a decentralized cryptocurrency, has garnered significant attention in the financial and investment world. Its potential for high returns has attracted many investors, but its volatile nature also poses substantial risks. The regulatory landscape of Bitcoin is a crucial aspect that investors must understand, as it directly impacts the currency's stability and adoption. President Trump's administration has shown varying stances on Bitcoin, with some officials advocating for stricter regulations due to concerns about its use in illegal activities, while others support its innovation. The Securities and Exchange Commission (SEC) and the Commodity Futures Trading Commission (CFTC) have been key players in shaping Bitcoin's regulatory environment. The importance of understanding Trump's influence on Bitcoin regulations is paramount for investors, as regulatory clarity can significantly sway market sentiment and investment decisions. Key concepts to grasp include the distinction between Bitcoin as a currency and a commodity, as well as the role of regulatory bodies in overseeing its trading and adoption. Your insights on Trump's potential influence on Bitcoin regulations are invaluable. To stay informed and engaged, subscribe to our newsletter and join the discussion in the comments below. Your feedback and thoughts are crucial in shaping our understanding of this complex issue. Let's learn and grow together. Keep the conversation going. President Trump's administration has taken a hands-off approach to Bitcoin regulation, with the SEC focusing on fraudulent ICOs rather than broader regulation. This has allowed Bitcoin to flourish, with its value rising from $1,000 in 2017 to over $50,000 in 2021. However, with potential changes in leadership, investors should stay informed. To navigate potential shifts, diversify your investment portfolio to include both cryptocurrencies and traditional assets. Monitor regulatory updates, as any significant changes could impact the market. For instance, if new regulations require stricter KYC procedures, it could affect the ease of trading. To stay ahead, join cryptocurrency forums and follow regulatory bodies like the SEC and CFTC. Lastly, consider consulting with a financial advisor who can provide personalized advice tailored to your investment goals. The sudden surge in Bitcoin prices following Trump's election victory in 2016 highlighted an urgent need to understand how his administration's policies would influence Bitcoin regulations. Trump's business-friendly stance and promise of deregulation sparked speculation about a potential boom in cryptocurrency markets. However, the lack of clear policy direction from the Trump government caused a regulatory limbo, leaving investors uncertain. The situation reached a pivotal moment when, in 2019, Trump tweeted his disapproval of cryptocurrencies, leading to a significant market drop. This event underscored the critical importance of monitoring Trump's government's stance on Bitcoin regulations to navigate the volatile cryptocurrency market effectively. Understanding the influence of Trump's government on Bitcoin regulations within the context of finance and investments requires grasping several key concepts. Firstly, Bitcoin is a decentralized digital currency, meaning it operates independently of any central authority, including governments. However, governments can influence Bitcoin through regulations aimed at protecting investors, preventing fraud, and mitigating risks. Trump's administration, known for its business-friendly approach, may have influenced the regulatory environment for Bitcoin. For instance, the Commodity Futures Trading Commission (CFTC) under Trump classified Bitcoin as a commodity, which allowed it to be traded on regulated exchanges. This classification opened up opportunities for institutional investors, boosting Bitcoin's legitimacy and value. Moreover, the Securities and Exchange Commission (SEC) under Trump also played a role. The SEC's stance on initial coin offerings (ICOs) was strict, requiring many projects to register as securities. This approach aimed to protect investors from fraudulent schemes, thus indirectly influencing the credibility and regulation of Bitcoin. Furthermore, the Office of the Comptroller of the Currency (OCC) under Trump issued guidelines allowing banks to provide cryptocurrency services, including custody services for Bitcoin. This move facilitated the integration of Bitcoin into traditional financial systems, making it more accessible. Lastly, the U.S. Trump could influence global Bitcoin regulations. Other countries often look to In summary, Trump's government influenced Bitcoin regulations through various agencies, impacting its legitimacy, accessibility, and global regulatory landscape. The Trump administration's stance on Bitcoin and cryptocurrencies was rather unclear, with mixed signals from key officials. However, practical applications in finance and investment could see significant shifts under a similar administration. For instance, if the Securities and Exchange Commission (SEC) were to adopt a stricter stance, initial coin offerings (ICOs) could face increased scrutiny, potentially limiting investment opportunities. On the other hand, a more lenient approach could boost innovation and investment. To navigate these potential challenges, investors should stay informed about regulatory updates and consider diversifying their portfolios. Additionally, engagement with regulatory bodies through comment periods and public forums can help shape policy. Trump's administration has been notable for its deregulatory stance, which could extend to Bitcoin. Trump's 2020 executive order on digital assets suggested a potential shift towards clearer regulations, which industry experts like Brian Armstrong, CEO of Coinbase, have welcomed. However, the administration's approach to cryptocurrencies has been inconsistent, with Treasury Secretary Steven Mnuchin expressing concerns about their use in illicit activities. This ambiguity could lead to either a boom in Bitcoin as investors seek safe havens or a crackdown akin to China's if regulatory fears prevail. Key will be the stance of the new administration, with some experts like Gary Gensler, former CFTC chair, suggesting a middle ground approach, balancing innovation with consumer protection. The climax lies in whether the U.S. Bitcoin as a legitimate financial instrument or imposes stringent regulations, shaping the global cryptocurrency landscape. Trump's administration has significantly influenced Bitcoin regulations, with the OCC's 2020 interpretive letter allowing banks to provide crypto custody services being a notable example. OCC 2020. However, the SEC's strict stance on ICOs and the CFTC's enforcement actions indicate a mixed approach. For instance, the SEC filed charges against Ripple Labs, alleging an unregistered securities offering. SEC 2020. This regulatory uncertainty has implications for investment in Bitcoin and other cryptocurrencies, with some investors seeking clarity before making significant investments. Expert opinions, such as those from the World Economic Forum, suggest that clear regulatory frameworks are crucial for mainstream adoption of cryptocurrencies. WEF 2021. The real-world implications are substantial, as regulations can impact the ease of trading, the cost of compliance, and ultimately, the growth and stability of the cryptocurrency market. Trump's administration has been relatively hands-off with Bitcoin, but that could change. Experts like CoinDesk's Lee Cohen suggest that the Biden administration might take a harder line on crypto regulation, with the SEC already focusing on Bitcoin ETFs. However, Trump's legacy could still impact regulations. For instance, the Office of the Comptroller of the Currency, OCC, under Trump allowed banks to custody crypto, a shift that could persist. Additionally, Trump's tax cuts might influence how investors approach crypto, with some potentially looking to Bitcoin as a hedge against inflation. But with Biden in office, there's a clear shift in tone, with Treasury Secretary Janet Yellen voicing concerns about Bitcoin's use in illicit activities. So, while Trump's influence lingers, the future of Bitcoin regulation is increasingly in Biden's hands. The Trump administration's stance on cryptocurrencies like Bitcoin is evolving. Regulatory clarity is emerging, with the IRS treating Bitcoin as property and the SEC categorizing some as securities. This clarity can benefit investors by reducing uncertainty. To stay informed, monitor updates from regulatory bodies and engage with industry experts. This proactive approach will help you navigate the regulatory landscape and make informed investment decisions. Stay engaged and informed to capitalize on opportunities in the dynamic world of Bitcoin and Finanzas y Investimentos. The Trump administration's stance on Bitcoin has been a roller coaster, with initial skepticism and later acknowledgement of its potential. While the Treasury has shown interest in regulating cryptocurrencies, the SEC's approach has been more cautious. The future holds uncertainty, but investors should stay informed and engaged. Understanding the nuances of policy shifts can provide a competitive edge in the ever-evolving world of finance and investment. Remember, knowledge is power, and staying curious is key to navigating the complex landscape of Bitcoin regulations. Keep exploring, keep questioning, and keep investing in your financial future. The power to shape your financial destiny lies in your hands. And if you've learned something with this video, subscribe our channel.